Hi, Sahil. So
Hi,
nice to
Nikunj.
meet you in person.
Pleasure to
So
meet
nice
you.
to meet you.
Such a pleasure.
Likewise,
Thank you for being
likewise,
here.
and congratulations. What a lovely place. As a child, when I would cross here, jungle दिखते थे, और road नहीं होते थे.
Thank you. You're very welcome. We've retained the jungle right inside here in a shape and form to honor what was here in the past.
Tell us about this place.
So, welcome to Max Square, Nikunj. This is our third office development. We bought this land 2 weeks before COVID,
Okay.
2020, and we completed it in 3 years. 2023, end of 2023, we completed this building. It's about 6.5 lakh square feet of office space with some retail, as you'll see. And delighted to share that we are 60% signed up and pre-leased as we stand here today.
The management of DLF is also saying that we are growing and demand is absolutely insatiable. When I'm meeting other folks also in this series of 18 on the go, the real estate demand really seems to be just shooting up like never before. Is it true?
Yes, absolutely. So we are in two segments, Nikunj. We're in the office space segment, which we characterize through the work well philosophy, and we're in the residential segment that we characterize through the live well ideology. We have seen tremendous demand in the residential space in the last year or so. You may recall that we launched our first project in Noida last year. And we sold at about 18,000 rupees a square foot, about 1 million square feet in a few days. So yes, we are seeing very strong demand, and we are also seeing significant consolidation towards organized, branded, and trustworthy developers.
If one looks at the history of Max Group, they were in telecom, they were in healthcare, they were in insurance. Big businesses have been exited, but the Max Group is now looking at making two businesses big, which is Max India, which is into old healthcare, and then the development business. Why has the group decided to make the real estate development business big when they're exiting other businesses?
We see a huge opportunity in real estate, and in particular in NCR. 25 million people, population. 20 years ago, there were more than 15 or 20 developers who were each doing sales of 3,000-4,000 crores a year on average.
This was 20 years ago.
Approximately 20 years ago. Today, if you look at it, there are 3 or 4 large names. So there's been a huge consolidation. Max has now, over the last 6 or 7 years since we started this business, developed a track record. We've done Max Towers, Max House. Here we are at Max Square. We've done our first residential community, and we've got tremendous success. Third, we have a strong brand and recognition here in the NCR region. Fourth, we have a very strong balance sheet, which we got thanks to the timely exit of our packaging business, and we've been able to deploy that at the right time in the cycle. So we believe that NCR offers an opportunity for a player like Max Estates to become in the top few of real estate developers in the years to come.
The real estate development in India is largely dominated by the legacy developers, right? You are entering into a turf which in a sense has consolidated, but is still the legacy builders have become larger big. So aren't you trying to perhaps go into somebody else's turf?
Absolutely not. Like I said, if you look at the numbers 15, 20 years ago, there was 20 players doing the numbers of sales that which I mentioned about. So is it not possible for a brand like Max Estates to scale, to be able to aspire to do 5,000 crores of sales in few years from now on an annual basis? I think it's very doable, and I don't think this will come at the cost of any of the legacy developers, simply because of the consolidation that has happened over the last 20 years, right? And we feel for a brand like Max, which is truly focused on end customer experience and absolutely fanatic about attention to detail, about user experience, about design, about ideology, and with a deep focus within the region, we are here. That we believe is going to be a huge strength for us to be able to build this out and allow the other players as well, legacy players as you call them, to also thrive. So we don't think that Max Estates becoming successful or thriving at the scale at where we are today and where we can aspire to be is going to come at the cost of any other developers.
So you would be very disciplined in terms of following prices, and focus would be profitability.
Absolutely, without a doubt. Disciplined in terms of geography, disciplined in terms of focus, disciplined in terms of product category, also discipline in terms of execution and asset classes. We are not going all over the country. We are not even going outside of Delhi, Noida, Gurgaon. We are sticking to our two core asset classes, which is office and residential. And we believe that we can take the company to the next level with a focus and a solid execution around both of these verticals.
So Sahil, you've given a sense to us that where you want the company to go, 5,000 crore of annual turnover, which means you are looking at maybe in 2 or 3 years, almost taking a giant leap, not a frog leap. 2,500 to become 5,000.
So, yeah, absolutely. So if you look at it, we will close this year at about 1,800 to 2,000 crores of top line. FY25, we have already shared that we are looking to cross 3,000 crores. So effectively, and we've already publicly stated that we are going to look to grow 20% every year on the top line. If you look at the numbers across the two verticals that we have, this would mean about 2 million square feet of residential sale a year, and the rental income that we have from the existing portfolio across the 4 million square feet that we have in operational and under construction. So absolutely, we feel that this is a conservative estimate for Max Estates to achieve. And given the size of the NCR market, like I said earlier, I don't think this will require us to take a disproportionate large market share in either of these two asset classes that we are in.
How much of your real estate right now you've already leased out, and how much do you have?
So we have four functional developments today. Max Towers, which is in Noida. You crossed it actually while coming here. We are 100% leased at a 30% premium to the micro market. Max House in Okhla is 100% leased, again at 30% premium to the micro market. This is our third development, Max Square. We are about 60% pre-leased, and this is also at about a 30% premium to the micro market. And the fourth project, which is in Okhla, the second phase of Max House, we are have just about opening, and we are already about 60 to 70% pre-leased.
So how much total million square foot you would have under lease by FY25?
So if we look at, I'd like to take, because we have two new projects. One is the land adjacent to this that, as you can see, we've started construction of about 1 million square feet. And in Gurgaon, we've got on Golf Course Extension, 2 million square feet of office space that's coming. So if we take a total of what we have, it's about 4.5 million square feet. On completion, this will enable us a 500 crores of rental income. Obviously, because this is a platform that we have with New York Life, so 51% is attributable to Max Estate. So we are talking about a 500 crore top line rental income for the portfolio, of which 250 crores will be to Max Estates, plus 100% of the facility management income that will come to Max Estates as well.
And I'm assuming there would be an escalation clause, and there would be at least a 5 to 10% negotiation every year as the leases renew again.
Absolutely. We are contracted with a 5%, we have a 15% increase every 3 years. And where we, as we have seen in Max Towers, where we have been able to release with clients' churn, we've been able to get an uplift over and above that of almost 20 to 25%. I'll give an illustration. Our first lease in Max Towers was signed at 100 rupees. We are currently releasing at 145 rupees. And it's just been 2.5 years.
Okay. Now we're talking about a large residential project going through. 1,800 crore is what you've collected from it. 3 functional properties, 2 more coming in. But if I look at your quarterly numbers, they do not capture it. Yes. Why is that?
Because the real estate accounting mechanism, Nikunj, is wherein the revenue will get accounted for along with the costs only at the time of completion of or occupancy certificate of the project, which is 3.5 years from now. Having said that, there are some costs which we are not able to accrue at the same time. So, for example, marketing costs, etc., that we incur are currently booked in the current P&L. So you see,
what in a sense, pay to the brokers, what you pay to the platforms.
Exactly. So those are currently charged to the current year's P&L, whereas the revenue is not shown in the current year's P&L. It will be shown only at the time of completion. So the correct way to look at and track us is through our collections and through the pre-sales that we have done. As an illustration for our Noida project, we've done 1,800 crores of sale, and we've already collected about 465 crores.
Okay. So 465 crore comes into the balance sheet
as a collection,
as something that comes in.
Yes.
But by the time you will capture into your revenue line,
yes,
that would be when the first delivery would start.
Absolutely.
That would be in FY27.
That's correct.
Okay. So for Max Estate, for shareholders, I'm just going to bring this part out, that don't look at what the quarterly numbers are, look at the accounting policy and what the accounting policy is indicating. Now with other large companies, because they've been in the business from years now,
Absolutely.
it just keeps on, it's a rolling number.
It's a rolling number. So what they did 4 or 5 years ago, please appreciate that we are a new company. We've literally been in business for five and a half years. We recently listed this company as a pure play real estate company. We had packaging as well. We exited the packaging business. So yes, the numbers from an accounting perspective will take time. But having said that, I think the numbers to track from a KPI perspective would be definitely a pre-sales number every year, as we did 1,800 crores, our lease rental income and our facility management income.
Okay, so FY26, FY27 is when the real magic will start.
From an accounting perspective. The magic has already started, Nikunj.
Fair point. Okay. Now what happens after Gurgaon? You go stop there or you'll have to expand?
Oh, absolutely not. We are going to grow both in Gurgaon as well as in Noida.
Okay.
We are evaluating opportunities for joint development, for outright purchases in both of these markets. I will also say that where Max Towers is in Noida, we've already won the bid for the Delhi 1 campus that was through the insolvency process. That adds another 2.6 million square feet.
That is in the bag?
We've got the NCLT approval. We are awaiting final approvals from the regulators, and we are very confident that that should come through at some point this year, which will enable us to add 2.6 million square feet further. So if you look at the total footprint across commercial and residential, we have close to about 9 million square feet today. We are going to be looking to add 2 to 3 million square feet every year as we look to build this out over the next few years.
If you compare your pricing with, let's say, DLF or the other luxury developers here, are you at par or are you above them already?
You see, so let's take the illustration of Noida. The local market here was about 12,000-13,000 rupees a square foot.
This is pre-COVID?
Just before we launched, after COVID, we were able to sell our development at 18,000 rupees a square foot. So that's a significant premium to the Noida micro market. Having said that, I think our aspiration is to be able to get a premium to the larger prevailing micro market, and that is our benchmark to be able to do, and that we are very confident of with our value proposition, with what we're looking to do, with all of what I've explained. I think we'll be able to get there.
What is your relationship with the Max New York? Because you've had partnerships with them, they've worked well for them, but the fact that they've come in a real estate business and it's a pension company, that speaks of a lovely association. But will they be extending their association with the Max Estates?
Absolutely. So New York Life actually came in, they exited the life insurance joint venture in 2012, if you remember, Nikunj, and then they first partnered with us in 2017, where the first development that they came in at the list co level through a pref allotment. Subsequently, from 2017 to now, they've come in 5 subsequent rounds, if I could call it, 5 subsequent co-investments. They've seen what we've done, they've seen the platform that we've built and the track record that we've built, and they're very pleased with that. We are their exclusive partner for India for real estate. They have an assets under management of about $600 billion globally. 5% of that is allocated to real estate. Our relationship with them goes back since the early 2000s, so it's almost 23, 24 years now. And I think real estate is a lot about trust. Is a lot about execution, is a lot about track record. So I think what they are pleased with is the fact that we've delivered on what we've set out to do, that we are extremely focused, we are extremely conservative from a balance sheet perspective, and we are truly looking to create developments that are differentiated and can move the needle. And I think with this focused approach, we are very confident of our partnership to continue to grow, and it has. So they've come in at Max Square 2, this is Max Square 1, the next development that we are building, they've come in at 49% equity there. In Gurgaon, they've come in at 49% equity in our commercial office project as well.
Okay, so they have invested as a shareholder in the company?
Equity shareholder.
And they're also coming as JV partners?
Absolutely.
Okay. If one looks at the entire luxury market, I get a sense after meeting some of your peers is that everybody wants to really aim at that market. Are you leaving the space, or are you consciously not moving into low-cost housing and other things?
See, we are not doing low-cost housing, and our strategy is not to be able to do that. I think the DNA required for each of these verticals is very different. And I think we are very confident of our capabilities to be able to cater. I will though say that luxury is a very broad definition. I think if you look at low cost as one segment, premium, premium plus, luxury, and then there's ultra luxury. I would think that we would like Max Estates to straddle the premium premium plus and luxury segment. So it's not just the luxury segment, but the premium segment as well. Definitely not low cost segment. So I think that that's a big opportunity in a market for us, because we are seeing across sectors, and you have much wider visibility than I do, across sectors of a premiumization that is happening, right? So I think through that lens, the addressable market that we're looking at Max Estates is quite large within the NCR for this geography. And again, I'll just step back. We need to sell 2.5 million square feet to get to the numbers that I'm talking to you about. So it's not that we have to take a disproportionately large market share to do that. And I think we have to take we have made choices about choosing what we do and to do it really, really, really well. And I'm hopeful and I'm confident that with the team that we've built, we'll be able to do that.
A lot of our peers are also saying that, look, Sahil is too young, right? He's entering into a business which in a sense is a big boys game. How would you defend that?
I think that's a benefit. I think the fact that we don't have legacy in the real estate space, the fact that I'm learning a lot of things, and you know, my father-in-law and our group chairman always says one thing which I've learned. He says, we should know one thing that others don't, is that we don't know anything, and therefore we are ready to learn. And I think our team is very humble. We do not, we don't claim to know it all. And yes, we are very young, but we are very hungry. We're willing to learn. We have a lot of fire in our belly, and we see the opportunity. And we've got a track record behind us over the last 5 or 6 years that we need to build on. So yeah.
If there would be a billboard outside your bedroom which you want to see in the morning, then you get up and sleep at night and see it before you sleep, what would that billboard be? What would be written on that billboard?
Focus.
Focus. Is that what you would be doing now? Focus?
Absolutely. Focus, 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 and execution. Because in my view, I think, like I explained to you, the macro, right? The numbers that we need to get to is not disproportionately large market share. People have done this 20 years ago. There were 20 players who were doing this. So we need to be very focused on execution, and our story is now boiled down to executing it right. Executing from the perspective of land acquisition, balance sheet strength and discipline, acquisition of land opportunities, design, and most importantly, customer experience. That every building, every development, every experience, work well or live well, every time you come in here should feel better. So the next time, hopefully, I welcome you, you should say, you know what, it's feeling better than what it did a year ago.
No, I mean, it's my first time here, and the experience, I think, is something which is absolutely breathtaking. I mean, where do you see this kind of a garden within a city, a garden within a, you know, development? So it's absolutely magnificent. Okay, so let's look at the big construct of the economy. As long as economy is growing between 7 to 8%, and there is nominal growth of 4 to 5%, you think the real estate cycle will in a sense stay firm?
You see, I think there is a lot of talk and noise about the current real estate cycle and these sold outs happening within a few days. To be candid with you, we are not underwriting like that. When we underwrite new projects, we still assume that it's going to take us the duration of time to sell. So we're not trying to get swayed by it, the current cycle. Our underwriting is assuming a very conservative sales velocity and at current prices. So we're not assuming that prices will continue to rise for residential in the way that they have done. But what we are really focusing and spending our time on is exceptional customer experiences and value to the customer. So yes, in this building, we are at a 30% premium to the micro market, but the value that we are getting you is like a lot of value if you were for what would be a building for 3x the price of what we are trying to provide. So I believe that as long as we keep ourselves absolutely focused on that, our balance sheet continues to remain strong, we execute well, we underwrite conservatively, I don't think that the cycles are going to affect us beyond a point. Yes, we will go through those cycles. Sometimes we will get fully sold out in a few days, and sometimes it will take us the velocity to sell. But over a longer period of time, and that's the lens that I like to take, is that over a longer period of time, the brand, the company, the focus, people should appreciate us for what we have done, and therefore we will naturally attract clients and business who would want to either work with us through our work well developments or live at our developments, in our live well developments. And once we're able to do that over a period of time, I think that's then the numbers will follow.
So final question, if the minute you think of Max, the immediate reaction is trust. healthcare, insurance. How are you looking at extending this brand appeal of Max beyond real estate? Would you be extending it to other sectors?
No, again, going back to it, we are focused only on the real estate space within NCR, within the two geographies. And I think if we are able to do that well, I would feel that we've contributed to the Max, the trust that the Max brand has, or the trust of the brand that, in a sense, we inherited. So doing that well is more than good enough, I think, moving forward.
So as a member of press, I've tracked Max Group, which in a sense were a very diversified group. They were investors. They have moved. They were in healthcare. They were also in insurance. But now, 5 years from now, when we will talk about the Max Group, it would be a real estate group with interest in senior living.
I think there will be two key businesses for the Max Group. Real estate will be one through Max Estates, and senior care, which is a separate business, which Tara and her team are doing a phenomenal job in building that business. That will be a separate business. I think both will be two separate identities. So yes, the Max Group will be across these two verticals with separate management teams. So I don't think there's a conglomerate structure, but they're just two separately listed companies, with two separate business areas and focus. And I really feel the opportunity across both is tremendous.
Final question. They say every man is following a number. You've given us the number for Max Estates, 5,000 crore annual turnover, hopefully soon, God willing. What is the number personally you're chasing?
To be honest, I don't chase numbers. I chase excellence in our outcomes and in customer experiences. And I think if we are able to do that and provide genuinely great value to our customers.
थोड़ा practical बताइए, अपने बारे में बताइए.
Numbers तो हैं.
It's sort of a Max system.
By wanting to create exceptional experiences and deliver exceptional value to customers. The numbers will come. I already shared the numbers with you. I'm very confident that Max Estates will emerge to be a 5,000 crore top line company in the years to come. And that's what we are driving towards. How we're going to do that, as we have discussed over the last some time. But I think getting what I was explaining, getting the customer experience right, getting the value proposition right, is going to enable us to get there in a way that is going to be sustainable, rather not just in a cyclical period. It has to be sustainable.
Compounding.
Compounding, and it has to be sustainable through various cycles, and that's what I'm trying to personally achieve, and frankly build an institution for the Max Group in the real estate space.
And finally, do you have a Sunday in your life, or it's always work, always phone calls, always WhatsApp, always design, always team?
I have 2 young girls, so I am delighted to have a Sunday, and I'm an involved dad, so absolutely we do. But interestingly, they also talk to me a lot about net zero, energy efficiency, and the sustainable developments.
What do you tell them?
They're pushing me. I've got to get there. My 6-year-old daughter, I have to tell you this, my 6-year-old daughter asked me a question to say, how is your building going to be environment friendly?
And what did you tell her?
I have to get better. No, but we are, so I explained what we're looking to do, but even to a 6-year-old kid, I think there's a lot more that all of us need to do. Not just at Max Estates, but the industry. We need to build more, we need to really focus more on sustainable developments and creating a better environment for our kids than the one that we inherited. So that's something that at a personal level, I hope that through our business of real estate, we're able to move the needle on.
So Prime Minister Modi has said that Modi 3.0 and there's Modi ki guarantee. So what is Sahil ki guarantee now?
We will continue to deliver exceptional products and experiences. I think that, and with a very focused approach, that I'm very confident.
That's your guarantee.
That's
Max ki guarantee.
That's Max ki guarantee. Absolutely.
Okay, so let's look at this place, and it's just want the camera to zoom out, and it is absolutely amazing to see that how things, in a sense, in Noida are now really migrating up. Experience, I won't use the word luxury, but experience, I think, is the center focus here. And Sahil, so nice to have you on ET.
Pleasure.
Thank you for hosting us.
Pleasure, Nikunj.
I came with the image of moving into a office building, but I'm coming out with the whole experience that office building mein kya ho sakta hai.
Thank you so much.
Thank you very much. Thank you very much.
Thank you. Thanks so much. Thank you.
If you like this video, then like, share and subscribe to ET Now.